This is India's #1 news network, and you're watching News 9. English news as it should be.
This is News 9. I'm Karthik Malhotra. You're watching Morning Brief at 9. First up, let's bring you all the headlines.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
India's exports to the United States plunged more than 37% between May and September as rising tariffs hit smartphones, pharmaceuticals and labor-intensive sectors. Warning comes from the Global Trade Research Initiative, or GTRI report. Good news for the stock markets. Foreign investors turn net buyers with more than 14,600 crore rupees worth of inflows in the month of October after 3 months of outflows boosted by strong earnings, Fed rate cut and optimism over U.S.-India trade talks. Meanwhile, India's car sales have hit an all-time monthly record in the month of October, with 4.7 lakh units sold, up 17% year-on-year as festive demand, GST cuts and strong SUV and EV sales drive momentum. And there's a global tech layoff story brewing. The numbers have surged as 218 companies have cut over 1.12 lakh jobs in the year 2025. Among the IT firms and the big tech, Amazon, Intel, TCS, Accenture and Microsoft lead mass workforce reductions amid the AI shift. Danish pharma giant Novo Nordisk announces 9,000 job cuts as the company pivots to a new generation once-a-month obesity injection touted as the successor to Ozempic and Wegovy. Zepto removes all handling and surge fees, offers free delivery on orders above 99 rupees under its All New Zepto Experience initiative. With 42 million Americans at risk of losing food benefits, US President Donald Trump demands Democrats reopen the government, warning the standoff could shave billions of GDP. As New York's mayor race heats up, President Donald Trump doubles down on his criticism on Democrat candidate Zohran Mamdani in a fiery interview, labeling him a communist and a radical threat. And U.S. Treasury Secretary Scott Bessent says Washington could respond with fresh tariffs on China if Beijing restricts critical mineral supplies, calling China an unreliable trade partner.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Let's start with the top story coming in early hours this morning. The Enforcement Directorate has stepped up its probe into Anil Ambani and his Reliance Group. The agency has attached assets worth 3,000 crore rupees, including Ambani's residence on Mumbai's upscale Pali Hill, along with flats, plots and office spaces belonging to Reliance Communications and Reliance Infrastructure across cities including Delhi, Noida, Goa, Pune, Hyderabad as well as Chennai. According to sources and media reports, the Reliance Center, Ambani's office located in Hotel Ranjit in central Delhi, is among the major properties attached. The ED's action comes in connection with allegations of bank fraud diversion exceeding 20,000 crore rupees. The agency claims that Ambani Group entities routed corporate loans to shell companies and subsidiaries to siphon off money. It has alleged large-scale round-tripping of funds within Reliance Group companies. And moving on to other stories for you this morning, India's exports to the United States have taken a sharp hit, plunging for the 4th straight month. The new report by the Global Trade Research Initiative, or GTRI, shows that outbound shipments between the month of May and September this year have slumped 37.5% from $8.8 billion to just $5.5 billion. The report says the steep fall follows a series of escalating U.S. tariffs that began in April this year. Now, duties on several Indian goods started at 10%, rose to 25% in August and hit 50% by the end of that month, squeezing margins across multiple sectors. The pain has been felt most in smartphones and pharmaceuticals, two of India's star export categories. Now, smartphone shipments, which had seen record growth last year, have now fallen by 58%. Tumbling from about $2.3 billion in May to under $1 billion at just about $885 million in the month of September. Pharma exports too have slipped nearly 16% in the same period. Now, industrial metals and auto parts, which face uniform tariffs across countries, recorded a smaller 16.7% drop, suggesting that slower industrial demand in the US rather than competitiveness may be to blame. Meanwhile, labor-intensive sectors like textiles, gems and jewelry, chemicals and agri-foods that make up nearly 60% of India's total exports to the US have shrunk one-third, 33%. Now, gems and jewelry alone are down almost 60%, hitting production hubs in Surat as well as Mumbai. Exports of solar panels have plunged to about 60% or so as competing suppliers like China and Vietnam face lower tariffs than India. The GTRI warns that without urgent government intervention, India could lose major market share to rivals like Vietnam, Mexico and China, even in sectors where India traditionally held an edge. And in good news for investors as well as those watching the markets, after 3 months of steady withdrawals, foreign investors are back in buying mode. In the month of October, foreign portfolio investors or FPIs infused a net 14,610 crore rupees into Indian equities, signaling a clear turnaround in sentiment. Now, this comes after a prolonged phase of outflows. Remember, almost 24,000 crore rupees of outflows in the month of September and about 34,990, almost 35,000 crore rupees in August, and 17,700 crore rupees of outflows were recorded in the month of July. According to experts, the rebound reflects a mix of resilient corporate earnings, the US Federal Reserve's 25 basis point rate cut, and renewed optimism around the US-India trade talks. Analysts also say investors are encouraged by improved risk sentiment, easing inflation and attractive valuations after recent market corrections. He adds that expectations of a softer interest rate cycle and domestic policy reforms, including GST rationalization, have further boosted confidence. Analysts also suggest that stronger Q2 FY26 results from major companies is a key factor behind FPIs turning net positive. Now, looking ahead, some experts believe that sustainability of this trend will hinge on global stability and consistent earnings in the quarters ahead. However, despite October's rebound, FPIs have still withdrawn nearly 1.4 lakh crore rupees from Indian equities in this calendar year. And moving on to car sales, India automobile market has also hit new highs in the month of October, setting a fresh sales record. Car sales in the month of October raced to an all-time monthly high, with Indians buying nearly 4.7 lakh cars in 1 month alone. Now, this included sedans, SUVs as well as hatchbacks. Now, this is 17% higher than October last year and well above the previous record of just 4.05 lakh units, that record was set in the month of Jan this year. The surge came on the back of festive season offers as well as GST cuts and strong consumer demand that drew buyers to showrooms across the country. Leading the charge was Maruti Suzuki, followed by Tata Motors and Mahindra & Mahindra. All three big auto majors posted their best ever monthly sales. Maruti's numbers rose 10.5% to more than 176,000 units. Meanwhile, Mahindra sold a record 71,600 plus units, while Tata Motors delivered more than 61,100 vehicles, led largely by soaring SUV demand. Now, Tata Motors, which dominates the local electric vehicle market, reported a 27% jump in overall EV sales and a massive 73% rise in just electric vehicles, touching 9,286 units. The company called it an unprecedented festive momentum driven by robust retail demand. Meanwhile, Hyundai Motors saw a 3% dip in dispatches to a little under 54,000 units, even as competition intensified in the SUV space. It wasn't just cars that saw brisk business. Two-wheelers and commercial vehicles also rode the wave. TVS Motor reported an 8% jump to 4.21 lakh units, while Suzuki Motorcycle India saw retail sales touch a record 1.4 lakh units despite slight dip in factory dispatches. In commercial vehicles too, Tata Motors reported a 7% rise to more than 35,100 units, and Ashok Leyland sales climbed 16% to more than 16,300 units. And moving on to the world of job cuts, the world's biggest tech companies are in cost-cutting mode, and the layoffs just keep on coming. According to data from Layoffs.fyi, 218 tech firms have reduced their headcount in the year 2025 alone, leading to over 1.12 lakh job losses across the globe. Now, most companies blame artificial intelligence-driven transformation and slower economic growth for the cuts, and the impact has been widespread from Silicon Valley to India's own Silicon Valley, Bengaluru. Now, Amazon has announced one of the largest job reductions ever, cutting up to 30,000 roles, nearly 4% of its corporate staff across units like operations and HR. The company says it's aiming to run like the world's largest startup. Now, Intel is letting go of some 24,000 employees. That's about 22% of its global workforce as part of a major restructuring. Job cuts are expected across the United States, Germany, Costa Rica, and Poland as the chipmaker struggles to keep up with rivals like Nvidia and AMD as the AI race heats up. In India, Tata Consultancy Services has cut nearly 20,000 jobs, its steepest ever reduction driven by automation as well as AI-led restructuring. Accenture too has announced thousands of layoffs, saying many traditional roles cannot be reskilled for new AI demands, bringing its headcount down to under 7.8 lakh employees. Now move on to Microsoft. Nearly 9,000 workers have been laid off this year, with more cuts expected across engineering as well as production teams. Meanwhile, after months of layoffs and major restructuring, Microsoft CEO Satya Nadella has confirmed that the company is ready to expand its workforce once again, with AI at the core of its next growth phase. Nadella said Microsoft's upcoming hiring drive will look very different from the pre-AI era, focusing on efficiency, productivity, and tech-led roles. He noted, and I quote him, "We will grow our headcount, but with a lot more leverage than before AI," unquote. Now remember, Microsoft closed its 2025 fiscal year with about 228,000 employees, roughly the same as last year, after cutting more than 15,000 jobs across divisions. And moving on to an Indian startup story now, Zepto is once again changing how India shops for groceries. The company has announced that it's doing away with all handling and surge fees, no matter the order value. And if your cart crosses 99 rupees, you won't even pay a delivery charge. It's part of what Zepto calls the All New Zepto Experience, a move that could make it the most affordable 10-minute delivery app in the country. Now, for smaller orders below 99 rupees, the company will still charge 30 rupees as delivery fee. But importantly, there's no small cart or convenience fee, even for cigarettes and tobacco deliveries. And moving on to the air quality in Delhi. Well, the air quality in the national capital continued to deteriorate, with the air quality index, or AQI, near AIIMS and surrounding areas touching 421, placing it in the severe category. This according to data from the Central Pollution Control Board. Now, as per the CPCB data, several monitoring stations across the capital have now recorded air quality in the severe range, while some areas continue to report very poor levels too. Now, most of these readings firmly place the city in the severe or very poor categories, a clear indication of worsening air pollution across the national capital. And time now to move to some global stories that we are tracking for you this Monday morning. Let's begin, as always, with the United States. Well, U.S. President Donald Trump on Sunday urged Democrats to end the government shutdown, telling reporters that all they have to do is open up the country. The deadlock continues as Democrats insist on extending federal tax credits that help Americans buy private health insurance before approving government funding. Now, Republicans, however, want the shutdown lifted first and talks to follow. Nearly 42 million Americans are set to lose food assistance from Saturday once funding for food stamp benefits runs out. The non-partisan Congressional Budget Office warns the shutdown could cost the U.S. economy between $7 to $14 billion, potentially shaving up to 2% of fourth quarter GDP due to halted federal spending.
Well, all we have to do is open up the country. You know, we voted 14 times to open the country. We have voted 14 times to open the country, and they vote to keep it closed. All they have to do is vote to open the country, and we only need 5 Democrats. We have a lot of Democrats. We only need 5. But the Republicans have voted 14 times to open the country.
Staying with the U.S. President Donald Trump, well, he has also said on Sunday that he is not considering supplying the long-range Tomahawk missiles to Ukraine. Now, Trump's comments come after Russian Foreign Minister and the spokesperson Maria Zakharova warned that sending such weapons to Kyiv would not help efforts to reach a potential ceasefire. Her remarks followed reports that the Pentagon had approved Tomahawk missile supplies to Ukraine.
Administration provide Ukraine with long-range Tomahawk missiles? Is that something that you're not considering that?
No, not really.
Well, Trump also said on Sunday that the United States could deploy troops or launch airstrikes in Nigeria to stop what he called the killing of large number of Christians in that country. Nigeria said it would welcome U.S. assistance against Islamist insurgents, but stressed that any support must respect its territorial integrity. Trump also said he had asked the Pentagon to prepare for possible fast military action if Nigeria fails to act.
On Nigeria, just wanted to ask you, do you envisage US boots on the ground?
Could be. I mean, a lot of things I envisage, a lot of things. They're killing record numbers of Christians in Nigeria. And they have other countries very bad also. You know that part of the world very bad. They're killing the Christians and killing them in very large numbers. We're not going to allow that to happen.
And with the New York City mayoral election just days away, U.S. President Donald Trump has intensified his criticism of Democratic candidate Zohran Mamdani, repeating his claim that the New York lawmaker is a communist. In an interview with CBS 60 Minutes, Trump interrupted the interviewer when she referred to Mamdani as a socialist, insisting he was, and I quote Donald Trump, far worse than a socialist, unquote. Now, Mamdani, whose campaign focuses on measures such as free bus rides and a rent freeze, is facing voters on November 4th. Early voting is underway across New York City with the final day of polling on Tuesday. A Fox News poll shows Mamdani leading the race with 47% compared to 31% for Republican candidate Andrew Cuomo. And there's a twist in the tail between U.S. and China relations when it comes to trade, as U.S. Treasury Secretary Scott Bessent has warned that Washington could consider new tariff pressure on China if Beijing moves to restrict exports of rare earth minerals. In an interview to Fox News on Sunday, Bessent called China an unreliable partner in certain trade areas, saying he was surprised by Beijing's earlier threat to curb supplies of critical minerals. China has now suspended the restrictions it imposed on rare earth materials after Xi Jinping and Donald Trump met for crucial talks in South Korea last week. But Bessent said the U.S. remains cautious, noting China has not always honored its commitments. Danish drug maker Novo Nordisk says it has now informed nearly all employees affected by its latest round of 9,000 job cuts. The The restructuring is part of a major shift in focus as the company pushes ahead with development of a new once-a-month weight loss injection seen as the next big breakthrough after Ozempic and Wegovy. Take a look.
Novo Nordisk has almost completed notifying employees impacted by the drug maker's 9,000 job cuts. That's according to a LinkedIn post by CEO Mike Dustar Friday. As jobs were slashed globally, he added that the pace of informing people varied according to local laws. It's part of Dustar's restructuring drive, which he launched last month, and comes as Novo faces heated competition in the United States, the world's biggest drug market, against rival Eli Lilly. The $150 billion weight loss drug market is booming, and Novo setting its sights on newer heights. The Danish pharma giant and another major rival, Pfizer, are in a bidding war over obesity biotech Metsera's hottest experimental treatments. The drug makers are vying for access to its once-monthly GLP-1 injectable. Current popular injectables, including Novo's Wegovy and Eli Lilly's Zepbound, are weekly shots. Metsera is one of several companies developing experimental weight loss drugs. The move signals an aggressive turn by Novo Nordisk a week after the ousting of most of the company's board. That was over concerns it was not moving fast enough in the obesity market.
With that, we slip into a short break, but coming up on the other side, we'll discuss the big IPO frenzy, especially the controversy surrounding Lenskart high valuation. Mohit Gang will be here to shed light on that.
भारत सरकार ने सभी देशवासियों के हित में टर्म लाइफ इंश्योरेंस से जीएसटी पूरी तरह से हटाकर जीरो कर दिया है। इससे टर्म लाइफ इंश्योरेंस काफी सस्ता हो गया है। पॉलिसी बाजार पर अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
क्वालिटी पे इतना कॉन्फिडेंस, इसलिए बिरला ओपस एश्योरेंस। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaopus.com पर।
एक्सक्यूज मी, आपने भारत कनेक्ट का नाम सुना है?
कोई जॉब वेबसाइट है? वैकेंसी है?
जॉब्स नहीं, वो 700 से ज्यादा एप्स पे बिल पेमेंट्स पॉसिबल बनाते हैं।
वाओ!
आप हमें जानते नहीं पर मानते जरूर हैं। हम हैं भारत कनेक्ट।
The goat or macabre satire is back. Cyrus Roja. From politics to pop culture, from your WhatsApp forwards to breaking news, nothing and no one is safe.
Relax, guys, relax. I only roast the truth, and the truth is always hilarious. Too much pressure.
Get ready for news caustic, bold, sharp, unfiltered, 100% Cyrus.
You're watching One Brief at 9. Now, there was this IPO frenzy visible on the Lal Street, especially with two big IPOs and one of them also turning out to be a little controversial. Mohit Gang is joining us this morning to help us understand what the strategy of retail investors should be when it comes to participating in the IPO frenzy. Mohit, thank you so much for your time. But before I let you chime in, I want to just initiate this, the details of what these two IPOs are, especially the one that has become controversial. First up, let's begin with Lenskart. Remember, the offer period started on October 31st and is open until tomorrow, November 4th. With as much as 2,150 crore rupees worth of shares as offer for sale, with a lot size of 37 rupees per bid and the price band of 382 to 402 rupees. Remember, the allotment date is November 6th, with the final listing of the shares on November 10th. Now, in a completely different orbit is also the IPO of Studs, which did open its IPO bids on October 30th until today, November 3rd, with an OFS of more than 455 crore rupees and lot size of 25 shares per bid. A price band much higher than Lenskart, but valuation much lower at 557 to 585 rupees per share. Remember, tomorrow, November 4th, is the allotment date with listing end of this week on November 7th. But amid this hype of IPO frenzy, Lenskart and its valuations have raised a big question mark, with experts cautioning that the 70,000 crore rupee valuation is an extremely high one, with the market cap which has seen a jump of 8 times from just 8,500 crore rupees in just 3 months. Now remember, founder and Shark Tank judge Piyush Bansal had bought back equity, part of his equity, at 52 rupees a share just months ahead of the IPO. Also, the profitability just 1 year before the IPO, is that really worth believing? And of course, this high valuation also comes with a high price to earning of as much as 235 times. Mohit gang, I want to really focus on the Lenskart IPO, which is open until tomorrow. Now, there has been a lot of question marks on the valuation. For retail investors, how much should they read into this valuation debate?
Hi Karthik, good morning. Always a pleasure to be on your show. How I wish that I was not drawn into this debate of...
I'm so sorry to do this to you on a Monday morning.
Absolutely fine. And look, I think Karthik, you can view Lenskart as per the lens you want to wear, right? And as they say, beauty lies in the eyes of beholder. So is the case with this particular IPO. And it completely depends on what lens are you viewing it. And let's look at the positive lens first, where you have seen institutional participation, you have seen big marquee foreign names and some domestic mutual fund names queuing up at this kind of valuation, right? So, and their thesis is pretty simple. It's a large TAM, hugely addressable market in a country like India, where the demographics is scorchingly speaking for itself, and an eyewear thing which perhaps every Indian will require at a particular age, right? So the TAM is extremely large. If you can, with some kind of technology, right now I'm not debating whether the technology is like path breaking or something which will turn the tide in favor of Lenskart or not, but if you can address that market through digital outreach at a very conducive price point, then perhaps the world is for yours to take, right? And India today has almost like 80,000 retail eyewear outlets. Can a Lenskart have around 10,000 outlets in next 3 to 5 years? Or 5,000 outlets for that matter? Perhaps they can, right? So it all depends on the audacity of their ambition, right? So that's the thesis. And if you go by that thesis, I think foreign players, FII investors, they particularly like that kind of a thesis where it's a tech play, large market, and a unilateral position, a kind of a dominance, right?
But what's the flip side?
Yeah, I'm coming to that. The second thesis, which is what most domestic investors are highlighting, is the crazy valuation. Look, honestly, to sustain a 235 times run rate on your earnings, and earnings which is also a one-time earning, is an extremely improbable task. I don't think so. In my memory, I don't recall of any company which could have sustained that kind of a valuation for a pretty long while. Maybe a quarter or two, maybe a year or two. When you are a company which is funded by private investments, it's a different case. But when you're a company which comes into public glare and are funded by public money, then it's a very different case altogether. So my sense is the valuation is absolutely absurd. A 70,000 crore kind of a valuation for this kind of a business doesn't justify itself as of now. If they can really turn sustainably profitable for next 2 years on, then perhaps one might have a look at this company. But my sense is right now, honestly, I think given the conditions, it's an avoid from a sheer valuation perspective and the addressable business perspective. Plus the second thesis, Karthik, I don't think so it's a very large tech play, right? So Tatas have been into this business and there is very little which tech can do.
So scalability will be a challenge.
Absolutely, right? So, and India will always remain a price conscious market, a fragmented market where unorganized players will kind of chip off your market share every nook and corner. So I think it's a tough ask. So my sense is one should just wait and watch for this one.
Wait and watch is the word coming in. Mohit gang, always a pleasure having you here on News 9. I'm sorry we are completely out of time, but we will have this conversation and a lot more in coming days right here on News 9. But for today, thank you so much for your time. And with that, we will slip into another break, but news continues on the other side of the break. You're watching News 9.
of elections has arrived. Or will Bihar, Gen Z usher in change? Have they emerged as a substantial vote base? We have been able to indigenously develop a system which a lot of countries aspire. We have also drawn that red line, and that's the best part. Donald Trump has been keeping everybody guessing. There are things you can negotiate and there are things you cannot negotiate. The American